I see two major disruptions right now, and they're both of a long-term structural nature. One is what I call deglobalization, which questions all the business models that were based on expansions in across the border territories, be that across Europe. That's perhaps less of a problem, but certainly expansions into, for instance, emerging market countries. And deglobalization raises a question mark behind that particular strategy. The second comes from what I call the fourth industrial revolution. It has to do with the capabilities given to us by IT, by the Internet of Things, by social media and all that. That indeed questions the business models, traditional business models as we have known them in the past. And the question really is, are insurers quick enough and swift enough to embark on those new trends? Or will there be new players that come in completely from the outside and will occupy some of the territory that's been played by the insurance sector? How well do insurers adapt to that? I think we're in early stages. We don't really see yet convincing business models that go into this direction. So the questions will have to be asked in, let's say, 5 years from now, how well the insurance industry has adapted to these trends. Well, insurers, to some extent, they have a high degree of resilience built into the way they do business. Insurers can live off their reserves for a long time, even if their business models are challenged. So that's what we're seeing right now. There's slightly a more short-term challenge coming from the low interest rate environment that in particularly questions the life insurance business model. This is a slow bleed, and insurers have a long time to basically weather those challenges. If the low interest rate environment should be protracted and stay on for much longer, then that might be another challenge arising. But so far, insurers have built-in resilience. Well, insurers already play an important role, an important social role. One, they provide, if you will, peace to their customers. They insure against the financial consequences of risk. They've done that in the past, and they're likely to continue to do that in the future. Second, insurers play an important role in what we call financial intermediation. In other words, policyholder payments, premiums are then rechanneled. Those that are not going into claims fulfillments are rechanneled into investments into the real economy, into long-term infrastructure investments. Now, the problem is a little bit that regulators are not quite forthcoming in producing a hospital environment for these kind of activities, in particular for the investment kind of activities. So I think regulators have to be very mindful of not killing, if you will, the goose that lays the golden eggs to some extent. I think insurers are fulfilling a very useful social role. They're well equipped to do this social role because they have a very long-term horizon. They can weather short-term setbacks. But in order to do that, insurers are dependent on a regulatory environment that lets them actually to live up to those long-term goals.